It's Brian Preston, the money guy.
Now we get to do a little Brian self-reflection because we're going to reach what financial success should look like in your 40s. I still get to claim the 40s. I'm getting on the latter part of the 40s.
You've seen the majority of this decade, so you get to really share some.
That creates wisdom, though. That's wisdom. Experience and mistakes create wisdom, so I can share some of that. But this is the stage. You're kind of at the fulfillment seeker point. This is where you are starting to have some successes, not only financially, but with your career. You're also getting, like I said, wisdom, because you have lived enough life. You know what works, what doesn't work. So this is the part we want to kind of talk about. Where are you on your 5 stages of wealth with this? Is the dream really built to last?
Sure. So, of course, level number 1 is stability. Stability. That's a funny word. Is stability. As you can imagine, it's all the stuff that we talked about inside your 20s and 30s. It's the healthy ratios, not having more than 25% of your cash flow go to housing, not having more than 8% going to autos, not carrying credit card debt. It's understanding that your risks are covered. You have life insurance and estate documents and disability insurance and emergency reserves. You've mastered the muscle memory of cash flow management. You probably don't have to budget anymore because you know how to do forced scarcity. You know how to do cash flow management. But here is something that we think that changes in your 40s. You probably have whittled down your balance sheet to where, at least by the end of your 40s, you probably have one debt left. You have one debt left, most likely.
Well, that's your low-interest mortgage debt.
That's
And we
right.
think that's actually pretty healthy. I'm okay. You guys know. Here's a benchmark that we share all the time, and there's some math behind this. Under 45, don't focus on the low-interest mortgage debt. We want your army of dollar bills, your compounding growth working for you. Over 45, get that debt out of here. We want you to be completely financially independent, meaning you have no obligations or any encumbrances put upon you, and that's debt. So it's okay, but this is the phase in your 40s. You're probably going to start paying down the mortgage debt.
And then I think it's so funny, Brian, in pre-show prep, when we were talking about the 20s, like, yeah, man, in your 20s, it's just easy to just die $100 at a time.
Yeah.
And you're like, if you think that's bad, wait till your 40s.
Well, it is, because, $1,000, I remember in my 20s, and even in parts of my early 30s, $1,000, if somebody had walked up to me on the street and given me $1,000, it would have changed where I was right then. You will see, and you're getting your 40s, you cannot make $10 mistakes, $100 mistakes. You're starting to make $1,000 mistakes, because this is the part where lifestyle creep. You're thinking, you know what? That mortgage seems small. I'm kind of at the point I could afford to go to a bigger house, nicer car. You just need to make sure you understand the why. Because just because you can flex doesn't mean you should flex. It's just not healthy. This is where you can make $1,000 mistakes.
It's a weird analogy for me because I operate under the assumption if ever you can flex, you should certainly flex.
We're not talking about actually breaking down into an
not
Arnold
actually
Schwarzenegger
flexing.
pose or
Okay,
anything
got
like that. That does lead we go from stability to strategy for your 40s. This is where I do think hopefully I've shared this often, is that I had some life goals. In my 30s, I wanted to cross, when I was 30, I wanted to hit 6 figures. When I was 40, I wanted to have 7 figures liquid. So when you think about that in those terms, you probably need a co-pilot. This is when you might want a financial advisor to kind of help you with what's going on with your finances.
Yeah, we think that there are a couple of different times it makes sense to hire an advisor. And this is one of the things. Either the size has gotten so big that you start to feel nervous, or perhaps you have so many things pulling you in so many different directions that you don't have time to be able to do it. Or maybe it's just gotten complicated.
Yeah.
You say this all the time, that success breeds complexity. You don't have to seek it out. It kind of
don't have
finds
to go
you.
look for it. It's going to find you.
So,
trust me.
In your 40s, it's kind of interesting how there's sort of a confluence of all 3 of those things kind of start to hit you all at once.
Yeah.
So one of the things that we're going to make available to you guys is if you are in your 40s or someone who's thinking about maybe going to hire a financial advisor, if you haven't had a chance to go out to our resource page, you should go out to moneyguide.com, go to resources, and we're actually equipping you. If you're someone who's interviewing, looking, we're going to make available a deliverable for you, 8 questions to ask your financial advisor. So it is right there for you. You can go through this. This will allow you to understand, okay, what's this person do? How do they do it? What are the things I ought to know before I make this decision? This is free. It's available. It's for you. It's out there.
So go check that part out. And I think, but that's a good pivot point, because you're going to have some big discussion points. When you're in your 40s, now that your army of dollar bills has reached this level, you are trying to figure out strategy. You're trying to make sure you're doing this right with the co-pilot. And we've talked about mortgage debts and other things come into play. But I think it would be very helpful for people to understand when we talk about the wealth multiplier, how does that, because you are going to have strategy decisions that you'll have to make in your 40s that, yes, it feels good emotionally to pay this off here or to do this here, but that might not be optimized.
Sure.
So that's why it's good to know what your options are.
Yeah, so again, if we're going to look at the wealth multiplier, again, you can access this by going to the resource page at moneyguide.com. A 40-year-old, every dollar they save can still turn over 7 times by the time they get to age 65.
Yeah.
Now, it does decrease through time. By the end of the 40s, at 49, it only triples. And I say only triples. That sounds kind of silly to say, but you had mentioned real easily, Brian, that you had a goal that by 40 in your 40s, you wanted to have $1 million liquid. Well, looking at these numbers, if you attain that goal by 40, you're on track to have $7 million by the time that you retire. If you have $1 million by the time you're 49, you're on track to have $3 million by the time that you retire. So your money can still be very valuable. It's a matter of how much of the hard work you've done to build up that army that can start working for you.
This is the perfect example of why 20-year-olds should be careful looking at 40-year-olds. And 40-year-olds, you're going to be so proud of yourself if you actually put in the hard work while you're younger. Because it is hard to feel sorry for a 40-something-year-old if you've reached 7 figures. Because the multiplier effect, even though it's not as big, it's going to be enough to put those inflation trolls to bed. For 100%. Sure, you will be completely in a great place. And then this is the part, I already talked about the flexing. Just because you can doesn't mean you should. Just make sure you don't price yourself outside of what creates success. Because there are things, if you keep pushing your lifestyle up, you can get in a situation where you price yourself out of happiness. And that's the part, I will tell you, on purpose, even as my income has gone up in my 40s, I've just quit swimming upstream. It's okay if you make more than a lot of your neighbors. It's okay if your house is not as big as it could be. There's more to money than just how much you can spend on it. So I want you to, that's a big part of what's going on with strategy in your 40s.
Yep, and then I think the last thing you said, Brian, is in your 40s, if you should have been doing this in your 20s and 30s, but if you weren't, in your 40s, you certainly need to start taking a temperature of your goals. You need to start assessing, am I actually on track, ahead of the curve, behind the curve? And one of the best ways we think that you can do that is you have to be tracking your net worth statement annually.
And use it like a CFO would. I mean, track how much of this is liquid assets. I mean, how much of this is actually going to be something that can pay for, replace expenses, or replace my income, and how's the allocation shaping up? Because we know you can be a wild person in your 20s and 30s, but you got to start thinking about risk because you're going to land this airplane in the next few decades. And then what do you need to live off of? I'm always amazed when I ask very successful people, what is your burn rate for your household? A lot of people don't know that. So you start figuring that stuff out. A net worth statement is going to be a big fundamental building block in that process.
And look, if you don't know where to start and you're like, I have no idea how to do a net worth statement, go out to moneyguy.com, download our 30-minute-ish financial plan. We actually put a template in there for you. So if you want a net worth statement that you can take and use and figure out how to mold for your liking, go grab that. It's available. It's free. It's accessible for you.
So I want to pivot from strategy now to security. And security, remember, is where you're not sweating the small stuff. But what does that mean for a 40-year-old?
Yeah, I'm actually kind of curious. What does not sweating the small stuff mean?
Well, I mean, look, go check out our content on my transition from tightwad, because there was nobody leaner with money than I am, to now not being a tightwad, because it is one of those things where you lose the latte effect. You're not sweating. If you want to go get a coffee quite a few times a week, if you want to do, travel, or even, I will tell you, this is the phase, I've driven every car for 10 to 12 years. Bought a Tesla in my 40s, though. And a lot of people, they get mad when they find out you have 2 nice cars. You're like, yeah, but if you saw in relationship to the work that has gone into and the assets that are working behind the scene, I think it's perfectly acceptable to go do things that bring you happiness. Go find what makes you happy. Go hyper-focus on spending that because you've automated and you've done the steps previously and you're not jeopardizing your financial future. Why do we get mad at people for buying nice cars in their 20s and 30s? Is because they are skipping steps. They're cutting corners off the fact because it actually is detrimental to their financial future. it's not hurting my financial future to have this. And I want you to have that same thing so you can do that. I think that's the part about security. You don't have to necessarily sweat the small stuff if you've done it right.
And I think one thing that I've watched you do, Brian, because I've been hanging out with you since you were in your early 30s. Do you remember? I mean, like, do you recognize, like, we've been hanging out for a long time now. And one of the things you guys say is you always used to tell your wife, look, if we can just buckle down right now, you told her in your 20s, and if we can just buckle down right now, we can pull off the gas in our 40s. If we just buckle down, we can pull off our gas. Well, one of the ways that you know you're in the security phase is if you do your net worth statement, you look at what you have and say, you know what? We can't. It's okay. Yeah. It's okay to pull off the gas. That is a surefire sign that you are starting to master the security level in your 40s.
Yeah, I mean, because this is probably the stage where you can think about vacations, traveling. You're just not sweating the little things. You're not worried about if you're ordering drinks at dinner.
That's right.
It just doesn't come into play anymore. And you probably are at this point also at a 7-figure liquid portfolio. Sure. And that really helps out. And this is the part where you will start questioning happiness versus fulfillment. There's a huge difference. Make sure you understand. Happiness means you can cover the basics. Fulfillment means you wake up every morning feeling like you're working towards making things better. You really feel good about the direction of your life. And that lets us transition into freedom.
Okay.
This is the level of wealth where, you know, freedom means you're doing things on your terms, when, where, and how. That's financial independence, and people like that. Now, this might happen in your 40s. It's bonus territory. I'm not counting on most people because the reality is most people don't even cross into millionaire status until their early 50s, according to the research.
Yeah, I think what's interesting is what we see is that most folks don't hit true financial independence in their 40s. But when you think about it, they can see the runway in their 40s, and potentially even the landing gear is down. It's about, okay, if I know that I'm going to exit the workforce at 55 or before 60, in my 40s, I can start to see that taking shape. At least in your 40s, you should start being able to recognize what does financial independence look like, and am I making the steps, or am I taking the steps that are going to get me there?
Well, and I want to give, because I think a lot of people watch our content and they're wired like us. They're the financial mutants like we are. I will go ahead and tell you guys, it wasn't until probably 42, 43 that this was the first time my financial life didn't feel like chaos. Because there was always things going on. Now, always
fantastic.
No, it really, because I know you're in that messy middle of
like
the 30s
chaos
right now. Because it doesn't mean you're not saving in your 20s or 30s, but it just means that it's tough. There's sacrifice. It's hard because you got kids, you got community, you got other causes, and it's just a lot of things are pulling on your back pocket or your purse. Yep. 40s is the first time, if you've done it right, I feel like you kind of don't feel like you're in chaos anymore. The goals start kind of happening easier and with a lot less stress.
Now, I do think, based on the clients that we get to work with, Brian, we talk about the 3 levels of army building. Your portfolio gets so big that it makes more than you can save, and then the second tier is it makes more than you can spend or more than your annual expenditures. And the third phase is it makes more than your income. I do feel like in the 40s, we see a lot of folks hit number 2 where it could replace expenses, and even they're starting to teeter on that edge where perhaps their portfolio might even make more than they make in a year.
And when you have good financial performing years, for sure. But it is so exciting to see your army of dollar bills reach a critical mass to where it can not only accomplish beating what you can save, what you can spend, but also what you earn.
That's right.
Man, that is fulfilling stuff, guys. That's why we call it freedom. So let's talk about a financial order of operations. What steps should be covered in this phase?
Yeah, so this is the part where you're kind of hitting the last 2 in the order of operation. You're hitting your prepaid future expenses. That's weddings you're going to have to pay for. That's college. That's those types of things that are coming up. And also, this is the stage. You said that the magical age you said was 45. When you get into your 40s, because the wealth multiplier changes, if you want to start prepaying some of that low interest debt to really focus on getting out of mortgage debt, it's probably okay in your 40s, so long as you're not sacrificing your building, to start doing that.
Yeah, and I want you to think about in your 40s, and this is just me giving you some sentimental spitting game at you about how you are sentimental in your 40s.
Game?
No, I mean, it is one of those things. Y'all know I've become much more sentimental in my 40s. This is the phase where I want you to be thinking about creating those memories. The kids will be out of the house in no time, so go make those years count. And then for all of my people who are part of the FIRE movement who think that they're leaving early, we've done a lot of shows on this. Withdrawal rates. Safe withdrawal rates is a big discussion point. Hear me out on this. If you are one of these people that thinks you're leaving the workforce in your 40s, you've hit freedom early, you get bonus points for that. Realize when we talk about safe withdrawal rates, you're probably thinking in the 3s not the 4s and 5s,
right.
because that's reserved for the 60s, the 50s, 60s, and even beyond, where you can get into those higher safe withdrawal rates. You need to be thinking conservative and put it in the 3s.
Said a little bit differently, if you're doing back of the napkin math and you know what you need to live off of and you just divide it by 5 and say that's the 0.05, that's the portfolio I need, that math might not hold up in your 40s. You might need to reassess that. And again, think about that co-pilot.
There's a lot of distractions and a lot of things that still are going to happen in your life. So you just want to make sure you got the plan buttoned down. And then this is the part, this is that some of that old man wisdom is you got to know your why. Because you will find the point that you are going to start reaching some of those financial goals. You're going to reach 7-figure. You're going to get to the point that maybe there was a dollar figure that you always said you wanted to aspire to. You'll get to it. And if you don't know your why, it's going to feel really empty. And that's the part I'm just trying to share with you. You will wake up with more pep in your step if you actually know what brings you fulfillment and you're actually on the path to making that happen.
So then I would say what that actually looks like, how that manifests in your 40s is the abundance, right?
Yeah.
If you're at the freedom point, you see what the why is. I think if you're abundant, you're able to actually execute on the why without having to worry about, okay, where is the money going to come from or what do I need to keep doing?
Well, remember, abundance is supposedly means that you your relationship with money has gone beyond just basic, can it replace my expenses and replace my wages? I will still tell you, I think this is aspirational for even those in their 40s, but you probably are starting to edge into some of the tools that comes from this. When I talk about the tools of abundance, I'm talking about charitable giving funds. I know I love the Fidelity Charitable Gift Fund. Cash balance plans. If you're in a job with high income and you have the ability to save a large portion because you just don't spend what you make.
Or even like deferred comp plans.
Yeah, there's higher end planning stuff that definitely, and then this is the part, I know I've said it in the 20s, I said it in the 30s, but there really is something fulfilling about helping and supporting others. Being generous is better to give than to receive. This is the stage where I think you're probably putting even more of that into action.
I agree, 100%.